All right, everybody, welcome to today's stock market brief show. It's going to be a quick, impactful one. We're going to talk about Nvidia earnings, what to expect. I'll tell you what, throw everything aside as far as this fundamental analysis, and let's dive into what the market's expectations are. We're going to use mathematics to get there, and we're going to use statistics to give us probabilities as to where Nvidia may land. So this is a chart of Nvidia. We're below last year's closing price. We saw a nice big move to the upper end over here. If you throw on a retracement, you can see that we're pulling back in these last 3 days where the volatility has increased, volumes have increased, and we sold off into what's known as the golden fib zone, which is about a 50 to 61.8% retracement level. In today's market performance, we saw the market continue to go down. VIX carried up to the upside. We had more of a risk off type day. Once again, consumer staples getting pretty heated over here, but it was up 1.42%. And we had energy lagging the way, technology lagging as well. What happened in the markets? Well, happened is the market came into what the market expected. And we talked about these specific levels on last night's brief that came into the daily expected zone right over here, almost touching the lower weekly move. That's the SPY. The Qs came right into that zone here, tagging into last year's closing price and finishing off right there at that weekly expected move. There, we'll give you updates on all of these. IWM did come down here to the lower daily implied move too. If we look at everything from a year-to-date basis, I know people are getting chopped up here, wondering what's going on, but let's zoom out. Let's look year-to-date, almost 2 months so far. And what do you notice? I notice a lot of green on the screen still. What points out, what stands out the most is right over here at the top left. And these are the larger market cap names that when they sink, when they come off, it puts pressure on the markets. And that's what we've been seeing. They're basically flat from a year-to-date perspective. IWM is down, right? SPY is slightly up. And then today, the NASDAQ 100 actually kind of went to the downside. But you see positive stuff in the financials and consumer defensive, right? And so forth. And then when you look at the larger market caps, some of them are flat, like Apple, right? Down 1%. Google's down about 7%. Nvidia, which will be reporting earnings. We'll talk about that momentarily. That's down 5%, which is pretty much nothing for a stock like that. Microsoft's down. And then Tesla is the one that's really down about 25%. And really, if you think of Tesla, I mean, think about what it looked like last year. In fact, during today's live stream, we pulled up like a 5-year chart, and 4 out of the 5 years, basically Tesla sold off at the beginning of each year till around March, April before rallying. And last year, it did the same thing. It found its bottom in around April and then rallied pretty significantly. Now, as the market's been selling off, a lot of the leading names, such as financials, right, have been coming off a little bit, and these are pulling into their lower zones right now. So this is an indicator that I extract. It's built by Joe Catanzara, known as the bridge bands. It responds quicker than Bollinger Bands, and I like to look at these, and I extract the data, and I put it out on this document that I share in the Discord, and it gives me a really fast sense of things that might be oversold, overbought, and a good fractal view of the market, allowing me to see intermarket things take place. Well, right now you can see a lot of these green lines are basically saying that we're above the midline on the on-chain channel, so it's a positive trend. Green means positive trend, and we're approaching these lower bands here. So a lot of what we've seen recent in the market was the bands were contracting. Now they're expanding. We're getting to come off. But if you're bullish financials, these are typically areas where you can now start to look for strength in buying dips if we're going to get some continued momentum here. Perhaps this big fall in financials in recent trade has to do with a lot of the stuff in fixed income land. So you can see a lot of the yields, right, came off, and you can see a lot of these red dots over here are all on bond proxy products, meaning that the various products over here in the bond world went up where the yields obviously went down. In fact, if you take a look at the 10-year 3-month, we're almost darn near about to invert again. It's only at 2 basis points. While this is happening, you can look at volatility, right? And you can see that a lot of volatility products are actually nearing their upper bands there too as well. Intraday, I will say that the back month versus front month volatility did reach down to this 1.0, slightly under it. And that happened to be right at around the time where the Qs were really digging into and around their lower weekly implied move, which could, like I said, indicate a potential bottoming area And we didn't close down there, so there's still potentially room to go, but we did get down there from an intraday basis. And this is all taking place, this volatility that we're seeing taking place right here. We can see the NASDAQ, it's coming right into the lower Bollinger Band. It's also in confluence with that 100-day inclining moving average. And when you look at this chart, I mean, it doesn't really look like too much damage is done, correct? Right? Of course it hasn't, right? All we did was come off 3 days. Yeah, it's been quite the move, quite the volume, but overall, we've just been in overall a choppy range. And you can see right now, if you look at the zones, right, we have SPY, Q, IWM, all at those lower bridge bands there too as well. So SPY almost hit that lower weekly implied move, right? So another distribution type day. It was down with some more volume. We still have an open month to date. So is it possible to see some sort of a bounce? Yeah, absolutely. But hey, we still haven't tagged the weekly implied move. I mean, we came within basically pennies over here. But I do want to call out that we've tagged it every single week so far this year. So we'll see if Nvidia can potentially help us. And now the big move is really kind of coming because the Bollinger Bands, right, volatility contracted, right? That's what happens when the Bollinger Bands go down, or when the Bollinger Band width line goes down. It means the Bollinger Bands are contracting. And then when it starts to move up, we go through a period of expansion. And this tightness here we haven't seen since like 2021. So we're starting to see the market open up. And if you remember this video where we talked about this, there's been a lot of fake outs and shakeouts with these moves where it expands one direction and then quickly reverses and so forth. So I don't know if that's going to be the case here, but I think Nvidia is going to give us a lot of insight as to what may potentially happen. So we talked about the Nvidia chart and kind of where it stands, but now I want to get a little bit more tactical and look at areas of risk for Nvidia. So if we take a look, right, here's the weekly implied move. The market priced this in the prior week. They knew about earnings, right? So they said basically, hey, here's the expected move for Nvidia going into the week of earnings. And this is rather large, right? This is a $13.33 expected move. We closed right here. So this is the midline. And now we're trading near the lower end right now. So we'll see what tomorrow brings, because you're going to want to look at what the earnings expected move is, because it's very likely we go and tag one of those specific areas. Now, how do you do that, right? So I think I'm going to try to be live tomorrow for Nvidia earnings, but in the case that I'm not, you could pull up the options chain and look at the money straddle. And while doing so, you want to also be at the nearest expiration. So the February 28th, 2025. And if you look at the ask for the call, the ask for the put, and add these both together, it's going to give you a rough estimate as where the market's expectations are going into earnings. Now, when did you do this? You do it near the closing bell to give a more accurate price. So what that looks like is once you come near to the closing bell over here, right? We're gonna do an example here, or you can look right here if you use Thinkorswim. It gives you their expected move calculation, which is at $14.04. But then you want to look at the closing price, and what this looks like from just a standard distribution here. We'll basically just pretend, we'll say this is at 125, and we're going to say this is basically a $10 expected move for easy math. So what does this look like? It's going to show, right, 125, right? This will be the where we currently stand. And then you'll have an expected move of plus and or minus, say $10, right? It's going to be higher than that, plus or minus $10. So what that means here is that it'd be 135 and then 125, sorry, 115 and then 135 over here. And this would give us about a 68% probability of tagging and or closing within, right, the one standard deviation move within the earnings expected move. Now, if the market doesn't like what it sees or likes what it sees to a higher extent, if we come in and kill it, you can see two standard deviation moves, right? So what would a two standard deviation move? Well, 95% of the time, right, we close within these ranges over here. So a little bit less probabilistic, but still always possible. Okay, and what would that level be? Well, you would add an additional or subtract an additional $10. So you have 115, this would be 105. Right? And then this would be 145. So those would be the levels that you would mark out on your chart as you get closer to the bell. Now, I do find it interesting that if we were to come slip down into here tomorrow, right before the bell closes, it's like the market priced in it already. So in my opinion, I feel like we would see Nvidia report, and either would be a non-event, meaning that it might go up, might go down, but then we'd come right back to the weekly implied move, and or we would see it move higher from those levels. If Nvidia wants to see strength and maybe go back into the middle of this week to date or weekly price where it's unchanged, well, then guess what, right? Whatever that says is probably be plus or minus $14 to $17, somewhere around there. That's basically opens the door for, once again, this weekly implied move. So it's going to be interesting to see kind of how Nvidia responds and where we at towards the closing bell. I'd be more bullish down in these areas. Now, the bear case, right, is if we break down from here and then the market does not like what it sees and it goes into its 2 standard deviation move, creating much more capitulation in the market. Now, I don't think that that's going to be the case. I don't want to put money where my mouth is there, but I don't think that that's going to be the case because the Qs have already came down to their lower weekly implied move. The SPY is basically down there right now too as well. So I don't think that that's going to be the case. And if it breaks down, I feel like that could be a capitulatory day where we can see a move higher for the remaining of the month back into these places. So that's kind of the narrative. That's what I'm looking for. It's not really directional bias. When I look at market conditions, we're still below the gamma flip line. This is where crashes can occur, right? Selling, but get selling, but get selling. But the vice versa flip there is buying, but gets buying, but gets buying. S&P 500 came down to and around 5,900, found a little bit of support there, and we're below all the declining 5-day moving averages and below all the year-to-date VWAPs here too as well. So the market needs to prove itself, and it needs to prove itself fast, or this bleeding can obviously continue. The expected moves going into tomorrow's trading session for SPY, the lower daily range is basically down here near last year's closing price and the lower weekly implied move. So if you want these levels, screenshot them, put them on your chart. That's for the SPY. If we look at the Qs right now, right, bounce at the lower last year's closing price. We're right there at the weekly implied move. If we break from this, right, which looks like kind of like a bear flag, but if we break from this, start looking at 505 to 506 for the lower end. If we start moving higher, you can pay attention to those upper daily moves right there. As far as what's on deck from a macro standpoint, we don't got much going on. We got some Fed speak, some new home data, some mortgage applications. That's about it. We got an auction. The big thing is obviously going to be that Nvidia earnings. So that's all I got for you on today's episode. I hope it helps out, gives you some insight into some risk levels to maybe help you better manage positions going into tomorrow's big day and big earnings report. I'll see you later.